What if I told you that America is about to enter the most dangerous and profitable decade in over 80 years? According to the fourth turning theory, a framework that has predicted every major American crisis since the Revolutionary War, we're now entering a period of societal upheaval that will reshape our economy, our institutions, and our wealth forever. The last fourth turning gave us the Great Depression and World War II, but also created some of the greatest fortunes in American history. Today, I'm going to show you exactly how to position your portfolio, not just to survive the coming crisis, but to thrive during it. Let me explain what the fourth turning actually is, because most people have never heard of this 80-year cycle that governs American history. Developed by historians William Strauss and Neil Howe, the fourth turning theory divides each generational cycle into 4 distinct phases, each lasting about 20 years. First comes the high, a post-crisis rebuilding period with strong institutions, economic growth, and social unity from 1946 to 1964. Next is the awakening, a time of questioning established norms and cultural activism from the 1960s through the early 1980s. Then comes the unraveling, when institutions weaken, trust in government declines, and individualism rises from 1985 to 2008. Finally, the crisis, or fourth turning, arrives. A period when the entire system resets through major upheaval. We've seen this pattern repeat like clockwork: the Revolutionary War, the Civil War, the Great Depression, and World War II. And now, starting around 2008 but accelerating dramatically in 2025, we're entering the next crisis phase. What makes this crisis fundamentally different from previous market downturns is the scale and interconnectedness of the challenges we're facing. Global debt has surpassed $300 trillion, over 330% of gross domestic product in developed economies, creating a vulnerability that makes 2008 look manageable. Aging demographics are creating an unprecedented burden on social systems, with Social Security trust funds projected to deplete by 2033 and the worker-to-retiree ratio falling to just 2.1 by 2040, straining pension systems worldwide. Automation shock is set to displace 1.68 million U.S. jobs by 2033 as robotics and artificial intelligence scale up. Geopolitical fragmentation, particularly the rising United States-China rivalry and BRICS nations creating gold-backed trade systems, is reshaping global power structures. This isn't just an economic crisis. It's a simultaneous technological, demographic, geopolitical, and financial perfect storm. Russell Napier, one of the world's most respected macro strategists and author of The Anatomy of the Bear, has developed what I call the fourth turning investment playbook. His first principle is to prioritize return of capital over return on capital, meaning your primary focus should be preserving your principal rather than chasing high returns during periods of systemic volatility and potential market collapse. His second principle is to favor tangible assets over financial assets because during crises, things you can touch, gold, energy infrastructure, real estate, historically outperform paper assets as currencies devalue and governments manipulate financial markets. His third principle is global diversification beyond the US dollar system, spreading investments across regions and currencies to maintain optionality as financial repression and capital controls become more likely. The historical performance data during previous fourth turnings is absolutely staggering and provides a roadmap for today's investors. From 1929 to 1946, the Great Depression and World War II crisis, gold returned over 1,200% as the dollar devalued and governments abandoned the gold standard. Defense stocks surged 690% as military spending exploded to fight global conflicts. Even during our most recent mini-crisis from 2008 to 2023, gold still returned 450%, and defense stocks gained 880% as quantitative easing debased currencies and geopolitical tensions escalated. These aren't coincidences. They're predictable patterns that occur when societies undergo systemic reset. Based on this historical framework, here are the specific investment opportunities for the 2025 to 2035 fourth turning. In precious metals, focus on gold bullion, the gold ETF, and Newmont Corporation. as your inflation hedge and protection against capital controls, while silver, through physical silver, the silver ETF, and Pan American Silver, offers additional diversification and higher volatility upside. In energy and infrastructure, target renewables like NextEra Energy and the Clean Energy ETF, nuclear power through Cameco and the Nuclear Energy ETF, and traditional energy giants like ExxonMobil, plus pipeline plays like Enbridge. AI data centers and electrification will drive unprecedented power demand over the next decade. Defense and cybersecurity will boom as global military budgets soar and cyber warfare escalates. Invest in Lockheed Martin, Northrop Grumman, the Defense ETF, CrowdStrike, and Palo Alto Networks. Emerging markets outside the dollar system will benefit from supply chain diversification and commodity demand. Target Vietnam through the Vietnam ETF, India via HDFC Bank, and the small cap India ETF, and Brazil through Vale and the Brazil ETF. Automation and robotics will capitalize on labor shortages and productivity demands. Focus on Rockwell Automation, Teradyne, the Robotics ETF, and the Robotics Innovation ETF, plus warehouse REITs like Prologis. Real assets provide tangible inflation hedges. Consider farmland partners for agricultural exposure, Weyerhaeuser for timber, and Brookfield Infrastructure for steady yields from essential services. Portfolio allocation depends on your risk tolerance and timeline. For conservative investors focused on wealth preservation, I recommend 25% in gold and silver via gold and silver ETFs and Newmont, 20% in energy and infrastructure, NextEra, Cameco, and Enbridge, 15% in emerging markets, Vietnam, India, Brazil, 10% in automation and defense stocks, 20% in cash and treasury bills for flexibility, and 10% in real assets like farmland and infrastructure REITs. For aggressive investors willing to bet on transformation, allocate 35% to automation and energy plays, 25% to emerging markets, 15% to precious metals, 15% to defense and cybersecurity, and maintain 10% cash for opportunistic purchases. Risk management becomes critical during a fourth turning because traditional investment rules break down. Prepare for capital controls by holding physical gold and considering offshore accounts in stable jurisdictions like Singapore or the UAE. Protect against hyperinflation with Treasury inflation-protected securities and investments in commodity producers that benefit from rising prices. Mitigate geopolitical shocks by including defense stocks and safe haven currencies like the Swiss franc. Most importantly, maintain a cash buffer covering 12 to 18 months of expenses, rebalance quarterly, monitor policy changes from key agencies like the Federal Reserve and Treasury, and absolutely avoid leverage to stay flexible as conditions change rapidly. The beauty of understanding fourth turning cycles is that they're predictable and profitable for prepared investors. While most people fear crisis and uncertainty, those who understand these patterns recognize that the greatest wealth transfers in history occurred during fourth turnings. The robber barons made their fortunes during the Industrial Revolution crisis. The greatest investors of the 20th century built wealth during the Great Depression, and today's tech billionaires leveraged the 2008 financial crisis to create unprecedented wealth. The 2025 to 2035. Fourth turning will create the next generation of millionaires and billionaires. The question is whether you'll be among them. What makes this fourth turning particularly compelling for investors is that we're not just dealing with financial and economic upheaval, we're experiencing technological revolution, geopolitical realignment, and generational wealth transfer simultaneously. AI and automation are creating winner-takes-all markets, deglobalization is reshaping supply chains, the dollar's reserve currency status is being challenged, and the largest wealth transfer in history is occurring as baby boomers age. These forces are creating massive dislocations and opportunities for those positioned correctly. The timeline is critical to understand. We're still in the early phases of this fourth turning, which typically lasts 15 to 20 years. The crisis will likely intensify through the late 2020s, reach peak disruption in the early 2030s, then begin resolution by the mid-2030s. This gives strategic investors nearly a decade to accumulate crisis-winning assets while they're still reasonably priced. Before the broader market recognizes these trends, early positioning is everything. By the time these strategies become obvious, the biggest gains will already be captured. Here's your action plan for fourth turning investing. First, educate yourself on prior crisis cycles and asset performance to understand what works and why. Second, gradually build positions in crisis-winning assets rather than trying to time the market perfectly. Dollar cost averaging into gold, defense stocks, and automation plays reduces risk while ensuring participation. Third, maintain flexibility through cash reserves and avoid over-leveraging, because fourth turnings create both incredible opportunities and devastating bear traps. Fourth, think globally by diversifying beyond US dollar assets in American markets. This crisis will be worldwide, but impact different regions differently. The psychological aspect of fourth turning investing is perhaps the most challenging part. By definition, you're buying assets that may seem expensive or risky during calm periods, holding them through extreme volatility, and betting against conventional wisdom during peak crisis. This requires both intellectual conviction in the historical patterns and emotional discipline to stick with the strategy when everyone else is panicking. The investors who built generational wealth during previous fourth turnings weren't the smartest or the most sophisticated. They were simply the most prepared and most patient. The coming decade will test every investor's conviction, strategy, and risk management skills. Traditional buy-and-hold portfolios of stocks and bonds will face unprecedented challenges as inflation surges, currencies debase, and geopolitical tensions escalate. But for investors who understand fourth-turning dynamics and position accordingly, this crisis represents the opportunity of several lifetimes. Gold, defense stocks, automation companies, and emerging market assets that benefit from dollar weakness and supply chain reshoring could deliver returns that dwarf anything seen in recent decades. Which fourth-turning investment opportunity excites you most? Precious metals, defense stocks, automation, or emerging markets? Are you prepared for capital controls and currency debasement? Or are you still thinking this is just another market cycle? Share your biggest fear and your best investment idea in the comments below. I read every comment and feature the best insights in follow-up videos. If this fourth turning framework changes how you think about investing, hit subscribe and the notification bell, because we're just getting started with crisis investing strategies. Remember, every fourth turning creates both tremendous danger and tremendous opportunity. The choice is yours. Will you be a victim of the crisis or a beneficiary of the wealth transfer? History shows us the playbook. Now it's time to execute it.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.